All right, bear with me, guys. I'm spoofing. You want to go down the rabbit hole, Mr. Anderson, and see how deep the rabbit hole really goes? That was a spoof. That was a spoof of a famous little movie. I'm not going to tell you which one, but with your own mind, hey, you guys are watching the Andrew Mo Money Show. This is a place where you can learn about stocks and help along with a data scientist that gives you a little bit of context. Speaking of spoofing, I want to be able to fully help you understand exactly how AMC was manipulated this Friday with this excellent DD here. Spoofing and layering, how AMC was manipulated this Friday. If you guys find some use or some enlightenment out of this and you want to take the red pill and see how deep this rabbit hole really goes, then you're going to want to smash that like button to help other apes find this video, as well as that subscribe button and that bell button. And now that all three things are done, let's get started. Disclaimer, this is not financial advice. Everything disclosed in this post was done by this person with public information. I come to my conclusions, as should you. Yes. I'm going to look at Louise and Admiral Morgan's supers in just a second. Switch this to GME real quick. Actually, I switch it to AMC because this video is about AMC. So, too long didn't read. Hedge funds were utilizing illegal trading techniques, spoofing and layering to manipulate the stock price of AMC to create a false misinterpretation of the underlying value of the stock and attempting to keep the price point below $14 to prevent it from organically growing to a price point that is unavoidable for a squeeze to happen. What is spoofing and layering? Well, we're going to explain it like I'm 5, baby. Spoofing is an illegal trading technique that utilizes algorithmic trading employed to outpace other market participants and to manipulate markets. You want to see me manipulate GameStop? You want to see me do it again? That's how quick it is. Spoofing is a form of market manipulation where a trader places fake buy or sell orders. Spoofing does this through high-frequency trading to add to the order book with no intention of getting filed on one of the sides. This, in effect, creates a false interpretation of the stock's underlying value through rigged orders, enticing people to believe that the stock was hit its absolute worth of value. It's kind of like when you're playing sports ball, right? One of those sports balls where there's a ball involved, and then you take the sports ball in one direction, and then you try to move in another direction. Everyone thought you were going to move in this direction, and that is illegal. This is not cool. Imagine purchasing a toy capsule, the capsule being the order and the toy encapsulated in its share. The capsule has packaging completely wrapped around it about the toy, so you assume the toys are in it. Once you purchase the toy capsule and open it, you realize the toy isn't there and was fooled by the packaging. All right. The main intention of spoofing is to manipulate the stock and affect the strength of one side to get filled on the other side of the order book at a price. For example, let's assume BTC has a strong resistance level at 420.69. Nice. Naturally, this is where sellers are expected to place their bids to sell their holdings. If the price gets rejected at a resistance level, it can fall steeply. However, if it breaks out of the resistance, then there's a higher probability of continuation to the upside. If for 2069 is a strong resistance, bots are likely to place spoof orders slightly above it. When buyers see massive sell orders above such an important technical level, they may become less encouraged to aggressively buy into the level. In AMC's case, hedge funds were manipulating the ask price to bait shareholders to sell the stock at $14 and prevent further investors to buy in to show that AMC has hit its limit. In Ooga Booga language, the hedge funds want the apes to believe the banana tree can't grow any more bananas. The 14 bananas are all it could produce. Right? Easy peasy, and there are some more explanations about GME spoofing and spoofing with examples here. Layering is even worse. It's essentially the Chad version of spoofing. Layering is where the trader enters multiple visible orders on one side of the market at multiple price tiers, which causes the midpoint of the spread to move away from the multiple orders, and the same trader executes a trade on the opposite side of the market. Again, this is manipulative because the execution occurs at a more favorable price than the trader was likely to obtain in the absence of the first orders. A good analogy is doing groceries at the supermarket. After going through aisle and aisle, you finalize your basket of goods has a total price of $13.93 based on the given price. Lace. Checkout, the cashier decides to scan their own personalized scanner and conclude that it's actually 2008-01. It seems like I have lost my face, so give me a hot second. Well, this is quite annoying. Okay, there I am. Well, that was annoying. Cool. So, thank you for bearing with us. This is basically what happened to AMC this Friday. The ask price was spread at decisive quantities at decisive price points to match the bid price, causing AMC to idle at $14. In lieu of this, AMC that ended up barcoding. All right, both spoofing and layering use algorithmic trading. Algorithmic trading uses a computer program that follows a defined set of instructions to place a trade. It will always outperform humans when trading due to its raw computational speed. There are many types of algorithm trading that can be utilized to fit a certain situation. In hedge funds case, the mean reversion was implemented. The mean reversion strategy is based on the concept that the high and low prices of an asset are a temporary phenomenon that reverts to their mean value periodically. Identifying and defining a price range and implementing an algorithm based on it allows trades to be placed automatically when the price of an asset breaks in and out of its defined range. The downside of spoofing. Spoofing can become riskier when there is a higher probability of unexpected market movements. For instance, let's assume a trader wants to spoof sell a resistance level. If there's a strong rally taking place and the FOMO among retail traders sell a resistance level, FOMO among retail traders suddenly drives massive volatility that spoof orders can quickly fill. This is essentially what happened with AMC when a huge buy order filled the fake orders faster than it could be filled again. This is obviously not ideal for the spoofer as they didn't intend to enter the position. Similarly, a short squeeze or a flash crash can fill even a large order within seconds. Essentially, all of these capsules of toys that are not supposed to be filled with toys, right? They're just spoofs. They could accidentally be filled with a large rise in one direction or another. And unfortunately, AMC experienced a flash crash, a very rapid, deep, and volatile fall in stock price occurring within a very short time period, right when spoofing was removed. If you think spoofing into a flash crash isn't deliberate, you don't know what the Navinder Singh Sarao is, a British self-taught trader who caused the US 2010 flash crash. Wow, that is a title to bring home. And this is the flash crash using Webull. Yes, that's right. This person uses Webull as well. You can grab your Webull in the description down below using the link that says Quit Robinhood. Behind the scenes of the $14 mirage. If you prefer watching the video rather than reading the analysis, you can watch this enraged Chad, 171K confirmed kills military monkey who invested 36,000 bananas, shouts injustice as he embraces his inner primal instinct. I love you, Trey. Thank you, Trey, for bringing that anger out in front of us. From Trey's quadruple witching day stream, timestamp on this first frame, the current stock price is $13.99 and the corresponding ask price wall size is 196. Now pay attention to how inhumanly fast it gets refilled compared to the other ask prices. When the wall size drops to 100, it instantly gets refilled to 3,700, an increase of 3,600. When the wall size gets dropped to 100 again, it instantly refills to 1,800, and when it was alternating between 100 and 200, it instantly gets filled from 5,000 from 200. This is spoofing in practicality. Keep in mind, these are all artificially created orders, meaning the orders are fake and synthetic. Okay. Once AMC broke through the $14 wall with that Gorilla Chewin buy order, notice how organically distributed the order book was compared to the order book in between $13.90 and $14. The reason behind this is the algorithm trading doesn't work once AMC was above $14 because the mean reversion wasn't operated to function at $14.01. Its maximum limit within the inputted range was $14. And then finally, this is where the layering was utilized after the huge volume spike. AMC was finally able to stop barcoding and spike to $14.10 to guarantee that AMC couldn't organically rise any further and pummel it down to $14. Hedge funds deployed layering. Look at the ask price on the order book compared to when AMC passed $14 legally. The ask price suddenly increased to 1,000 spontaneously. What's even worse is that multiple ask prices sizes have increased to thousands at an instantaneous rate. And funny enough, just imagine, look, it's basically a hard wall at $14. Just imagine that they never would have gotten away with this if they didn't show their cards and were running out of options. Now we have finally learned spoofing and layering, as well as the short wall that Trey was talking about on the show back on Friday during after hours. You never would have learned this if they didn't have to use it. Conclusion. Oh, hold on, one more. This graph specifically calculated based on short transactions at a precise location. Let's take a look. Each small dot represents 500 shorts transactions minimum. A bigger dot means that a bigger number of shorts transactions. Multiple dots at a particular time frame means multiple short transactions are executed at different price points. And if the dots are somehow overlapping with each other, that means the price points are done within a decimal or smaller. Pay close attention to the price point at $14 where the dots overlapped and our blob size, right here and right here. The majority of the short transactions were executed always within $13.99 to $14 until AMC broke $14, and it did. A huge short transaction was executed to prevent it from rising further on. Notice how it's replicant of AMC's actual graph. Conclusion. So once again, that data, gotta shake it off because I love math so much. Gotta love that data visualized to a T. Expect more spoofing and layering instead of short ladder attacks. A short ladder attack requires a vast amount of short positions and is a one-turn move. On the other hand, spoofing and layering usually can be executed based on decisive amounts that last at a longer time span, increasing efficiency and optimization. Think of short ladder attacks as a nuke and spoofing and layering as a Fort Knox prison. A nuke obliterates any matter at a large scale and is unavoidable within its range, while Alcatraz, albeit being the tightest security, is still escapable given considerable time and effort. To connect that analogy to the point, hedge funds are probably starting to use spoofing and layering more frequently as they have realized that short ladder attacks that they are running out or they cannot make it happen more sustainably. Hedge funds can't constantly rely on short ladder attacks anymore since it has become more and more apparent. As an act repeated becomes a habit and a habit repeated becomes a routine. Short ladder attacks are becoming more of a habit. And it's already been 5+ months. Can you imagine just fighting through this war here? Hedge funds can't safely guarantee the price will continuously drop after a short ladder attack due to two factors. One, smooth-brained apes that haven't joined the fray will just see as opportunities to buy low and sell high. Brains are on point here, causing the price back to go where it was pre-shorted price and hodl until the moon. Two, smart money apes or apes with more than 0.01 wrinkles will realize that AMC was and has always been a legitimate company. And if people do start investing, AMC will grow organically to a price point that hedge funds can no longer prevent it from squeezing. Excuse me. This is definitely possible since the world is recovering from the COVID-19 pandemic, with the recent news most notably reopening 98% of its locations beginning March 19th. AMC is forecasting to have a bright outlook. Other news such as Fidelity purchasing 556,000 shares and Zacks recommendations will ensure to bring attention to investors that AMC can be a long-term investment candidate. I know a lot of you are here to look for GME specific research. However, AMC is a solid stock that exists in a different population of people, and we can support both brothers at the same time. AMC has the potential to both squeeze and is a long-term investment. Due to these factors, I theorize that the hedge funds have decided to devise a devious plan to create a narrative that AMC is at its peak value, dismissing its probability to squeeze to prevent further organic growth to a price point that will cause the squeeze to squoze. So what are you guys imagining? Because first of all, I am vested in both of these stocks, roughly about a couple hundred or so shares in AMC and like 40-50 shares in GME. One of the first things I want you to note is that I'm not trying to tell you how to buy, sell, hodl, or anything of that sort. I'm trying to tell you to make your own decisions, choose your own research, and build out that path to financial education. So, spoofing and layering. If you learn something brand new, go ahead, drop that like button so that other apes like you can learn about spoofing and layering so that we are ready for the tactics that the hedge funds are already working on, trying to bring down the price of both GME and AMC. As you guys saw, GME is also a victim to this kind of attacks. And finally, if you guys haven't yet tried to join the Moon Platoon, it's really fun. These people have joined the officer ranks of the Moon Platoon by pressing the join button next to the subscribe button or going down to the description and checking out the Patreon link. I really appreciate everybody here, especially those of you who have just pressed that subscribe button, like you, moving your mouse to the subscribe button right now and pressing that bell button too. And as always, for now, but not for forever, I'll see you in space.